Hello, so today we have another candlestick pattern to go over and see how can we integrate the pattern into our trading plan. One of the more basic trading patterns that are out there, candlestick patterns, that is very easy to identify but not so I would say common. You don't really see it in everyday training. So this one is called Three White Soldiers, and of course, as the name itself says, we're looking to find three consecutive candlesticks and actually three consecutive bullish candlesticks, since this is a bullish pattern. So we're looking to buy the pair after we have identified three consecutive bullish candlesticks. So since this is a trend reversal pattern, we look for the downtrend first. So as soon as we have identified the downtrend, like you can see here, then we are looking if we can find three consecutive long green candles that indicate that the downside has finished, and we are looking to create an uptrend, and we want to, of course, ride this uptrend and push the price higher. So each candle must open progressively upward, meaning that it should establish a new short-term high, and one more, I would say, small, not really a condition in order to identify this pattern, is that the VIX from these three candles, the upside VIX should not be really long. So you don't want to see that the price pushed higher but it did not close in the at the highs. So what does this strategy really mean? Actually, as I said, this pattern appears after a downtrend, and it suggests that bears are exhausted and the bulls are taking control now, and they are starting to push the price upward. It creates a strong reversal, and actually it shifts a market from bear to bull. And as you can see here, after you have identified three consecutive long bullish candles, you look for a small retracement, you enter the trade, you look for a stop loss below the first candle or below the low, and then you look higher to take your profits off the table. More importantly, this is not really a trade immediately pattern, but it should be used as a pattern to identify that the trend is changing and we are now entering the trend, the upside trend, meaning that we are looking to enter long trades after every retracement. Here we have another chart, again dollar yen hourly chart. You can see here that we're pushing downside. We have a shallow retracement here, again the downside, and then three healthy, or in this case four, but we're interested in the first three candles, especially look at the first one and the third one, extremely long green healthy candles. We close at the almost at the top on both of them, and the second one is not so long, but still it's a healthy one, since there is not the wick to the upside is not really long, so the price closed near highs. And this, if you look at this simply almost like from your graphically, you don't have to be a forex expert to look at this and say this is a push higher and we're looking to create a new highs, we're looking to break this downtrend, and we're looking to push for the price to push higher. As soon as you have these three candles, this means that the downtrend has finished and we are looking to enter into a trade on any retracement to buy and to ride the trend. And you can see here we create a high, higher high, higher high, higher high, higher high. So the price more or less pushed 100 pips on an hourly chart from when we have identified the three white soldiers pattern.